Hello, everybody, and welcome to the European Session Brief. We're on Friday, the 19th of May, 2023. Let's take a look at markets and some of the latest moves because we've had a liftoff in these equity markets. In particular, the US dollar has also seen a bid, and that's largely because, well, it's being put down to the pending agreement on the lifting of the US debt ceiling. Yesterday's speaker Kevin McCarthy stoked optimism about the US debt limit deal getting reached on Capitol Hill after negotiations, narrowed to top staffers for McCarthy and President Joe Biden. McCarthy and Senate Majority Leader Chuck Schumer are making plans for votes in the coming days on a bipartisan deal to avert a catastrophic US debt default. In my eyes, was never happening. Concerns are mounting that the US government will run out of funds by early next month if the debt limit isn't raised or suspended before then, as the amount of money available to pay bills has already dwindled to the lowest since December of 2021. And how have markets reacted? Well, we've seen a positive move in the US dollar. Interestingly, I'll go through the US dollar in a minute. I'll focus firstly on equities. So, yeah, equities are just in a huge relief. We've seen tech stocks absolutely rip higher. The NASDAQ basically entered beast mode. We know that when that market moves, it can move. The DAX as well has also been able to see a nice technical, really clean technical breakout of that range highs and now trading at new yearly highs. So it's been a pretty positive past 24 hours for equities, it must be said. The FTSE not quite so much, doesn't hold much tech inside the index, at least it's not heavily weighted by any means, and that's why you've not really seen much movement in this market because it has been tech leading the way. And the Fed as well, we've got Federal Reserve officials are increasingly split now. They're sounding increasingly split over whether to raise interest rates at the next meeting or pause their credit tightening campaign. A compromise some have suggested, a skip where they put off a rate increase next month only to return to at their following meeting in July. Dallas Fed Chief Logan suggested that she's not ready to call a halt to the Fed's tightening campaign and floated an option to skip action next month. Atlanta Fed President Raphael Bostic has also said that not moving in June wouldn't necessarily mean the Fed was done raising rates. Over in China, the economy is at risk of being caught in a confidence trap as the post-COVID recovery loses steam, presenting Beijing with a problem that can't easily be solved with traditional tools, such as interest rate cuts. Evidence of low business and consumer confidence was everywhere in this week's official data. China's leadership is aware of the problem, last month referencing low confidence as a challenge to the economy. However, some concrete confidence boosting policy initiatives have been made small scale. Coming up today, European shares are on track to advance, as I mentioned, the optimism for a breakthrough in the US debt ceiling talks. ECB President Christine Lagarde participates in a panel at the Brazil Central Bank conference. That is, I've got conference and confidence in my mind. ECB Executive Board member Isabel Schnabel and BOE policymaker Jonathan Haskell also have been speaking also having speaking engagements. We've got German PPI data, which hasn't really been much of an effect on markets. In fact, we can have a quick look at how that came through on our own economic calendar. Came through ahead of the forecast quite significantly as well. There you can see minus 4.5 was forecast. Later on today, we've got Fed Chair Jerome Powell speaking. Apart from that, there's not really much from the calendar. So talks over the debt ceiling, any more noises coming out of that, particularly on what's under the bonnet with the details of the agreement, is going to be watched closely by markets, fiscal policies, fiscal agreements. I think I was reading this morning there's $1 billion of treasury bills um, being printed by the Treasury because of this. I'm going to find out and perhaps I'll post that. But essentially, that is also what could be leading to a squeeze in the US dollar, as in a shortage of US dollars, because they'll be coming out of private markets going into buy the treasury bills once they are printed by the treasury. So and hence why we've seen the push in the US dollar. So and again, all that move could be unwound if, for example, the deal fails to pass through House. how significantly it fails. There is still of a risk that this move gets unwound, but for now it is looking like a clean technical breakout. And if you look at the US markets, which I posted inside the indices chat today, you'll see that as well represented on those charts and just some comments that I made too. So yeah, apart from that, not really much that I want to discuss this morning. I'll see you all inside the next session brief later on. Thanks and bye for now.